And joining us today on our very first Lunch and Learn is Kellie Griffith with CNB Custody. Tell us a little bit about who Kellie is, what CNB Custody is, and then when I'm looking at your little signature line that I'm going to share, you have a lot of letters and titles, so you might tell us what some of those are as well.
We are a division of Community National Bank. We are located in Seneca, Kansas, a couple hours from Kansas City. We're a self-directed IRA custodian. We've been in business since 1985 as far as just being an IRA custodian goes. So yeah, been in business for a few years as far as the real estate goes. We do hold several other alternative investments, LLCs, limited partnerships, REITs, mutual funds, annuities, several investments you can choose from. So not just real estate. So if you do have real estate and an excess of cash in the account, you have those other options, including our bank CDs to go that route. So that's awesome that we provide all those certain different investment types. And as far as those abbreviations after my name, it is a RETA certified self-directed industry professional. At the end of the month of October, I took a couple of big tests for RETA, which got me then the certified self-directed industry professional title. So I did put that on my name.
Hopefully we'll be seeing you a lot more at the MAREI meetings, so when they have questions, they can talk to you and come ask you questions.
Yep, for sure. Jenny and I both will be attending the December 10th meeting.
Well, let's just jump in here.
Okay.
I know some of the people might be completely new. What is a self-directed IRA?
It's an individual retirement account. It gives you more options rather than your typical stocks and bonds. A self-directed IRA allows you to self-direct your own account. It gives you those certain alternative investment options like single member LLCs, multi-member LLCs, limited partnerships, and then your directly held real estate. So it just gives you more investment options, really.
Okay. So one of them is real estate. How do we buy real estate in our self-directed IRA account?
Really, it's super simple. If you think about it, basically for us, you would complete your application, your IRA application to open your account. The biggest is to decide what type of an account that you want to have your investment in, whether it's a traditional IRA, Roth IRA, or a SEP IRA. Traditional IRA is all pre-tax money. Roth IRA is all your after-tax. A SEP IRA that we do also offer is basically a traditional IRA. It just has your bigger contribution limits. Whether on a traditional IRA you have those contribution limits the IRS poses on every year, SEP IRA just has a higher limit. So you first just have to decide what type of IRA you're opening. So you would use our IRA application. Then you would transfer your funding in, whether it be from an IRA, and it would move over tax-free, moving over from an IRA or a qualified retirement plan, a 401k, 403b. You can roll over that money into the IRA to fund your real estate purchase. I would say get your account open, get it funded, and then start looking for the property that you're interested in. Because by the time you find it, usually there's a very small window of putting in your offer, and then the earnest money has to follow that. So make sure your IRA is open, your account's funded, ready to go by the time you find that investment that you want to invest in, or your rental property, or whatever it may be. So once it's funded, we work with your attorney, your real estate agent. We get that contract going. The buyer registration, this is important to remember. Make sure the buyer registration on the contract is not in your own personal name. Make sure it's under the name of your IRA. So it'd be Community National Bank, FBO, Kim Tucker, IRA. And then we sign the contract as the buyer. Like I said, again, make sure you're not signing that. If you sign that, then that would be construed as a prohibited transaction. We don't want to do that at the start, at the very beginning of your purchase. We want to avoid that. So make sure the contract is in the name of the IRA. and that the earnest money is paid out of the IRA. Go ahead,
I
Kim.
found when I've bought my property in the IRA doing all these things, the first thing I do is get a sample of the contract and I sit down with you and make sure that I know what goes in what spot
Yeah,
before I even go looking at houses. And then as an agent representing people buying in their IRA, I've always recommended that as well, because when we're filling it out, every IRA company is different on how they want
that's true.
everything done. So,
Yep,
I always like reach out to my custodian and have them explain it to me before we get started.
right. And of course, we read the contract thoroughly. Every section we read. On the contract, we find out if there's earnest money that needs to be paid, when the closing date is, any stipulations as far as inspections go. We look at all that and then we sign the contract. A lot of times it's electronically signed. Others require a physical signature and we FedEx that along with the earnest money, or most of the time we wire. But if ever an issue with the contract, once we review it, we will get a hold of the title company and get it fixed. Of course, we will get the client's approval before we sign it. Typically, that comes in a way of DocuSign. We will send you the contract. You will read through it, review it, approve it by signing. Once we get your signature back that you're okay with the contract, then we sign it, get it to the title company, get it under contract. And then by the time the closing date arrives, we work with the title company, we work with the closing agent, and then we get those closing funds sent out. So 4 simple steps: get your account open, get your IRA funded, give us the contract, the purchase contract, we'll get that going, and then 4 would be the closing. When that's all said and done on your portfolio holdings through your IRA, you're just going to see the address of the property as a holding, and then the dollar amount, the value, as what the purchase price of the property that will be. So 4
So
simple steps. We'll help you through it, but we'll work with your title company, we'll work with your attorney, but we'll step you through the process as much as we can.
And then once we have the property, we either want to have a property manager doing everything so that they can pay all the bills and then the IRA can reimburse the property manager, which I think is easier. Because if you have multiple bills, I did once where I had to turn on the gas, I had to turn on the water, I had to get the insurance, and I had to do everything. And every one of those bills had to be paid by the IRA. And if I would have had a property management company in between me and all of those utilities, it would have been one payment, not 5.
Right. I mean, I would say it's so much easier handling the income and the expenses if you have a property manager. But you don't necessarily have to have one. You can collect the rent yourself. Just make sure the rent check is payable to the IRA and not to you personally. Your income is going to be deposited back into your IRA. But yeah, property managers are great as far as accounting goes. They pay the expenses, they collect the rent for you, send us the remainder after all those expenses are paid. All that goes back into your IRA. They handle the accounting portion of it. So that's great. And we'll work with your property manager for sure. A lot of times they offer an online account for us to be able to track those expenses and the rent. So that's great. That takes the accounting out of you, since you're disqualified from interacting with your IRA in a sense of the rent. Basically, the rent check can't be payable to you, and then you deposit it to your checking or savings account and then forward it to us. That's prohibited by the IRS. They won't allow you to do that. So it really just takes the risk out of it if you have a property manager helping you out.
And the
So,
property manager can't be your company that you own as a property management company. It needs to be a third
right.
party company.
Exactly. Make sure it's third party. Make sure the property management company is not owned either by you, your spouse, or any of those other disqualified persons to your IRA. So that's all your lineal descendants. That's you, your spouse, your children, your grandchildren, like aunts, uncles, siblings. Those are all okay. Those are not disqualified from your IRA. But all your lineal descendants, just make sure that you're not interacting with those people with your IRA. That would be your prohibited transactions. Any of those disqualified people, they wouldn't be able to, let's say you have a rental, they would not be able to rent the property or live there. So we can go over that a little bit later. I guess that's one of the categories that Kim put on here for us to talk about.
Well, Angela was asking a question. If we're opening an IRA with you, is there a minimum amount to start, or can we start with $500 and work our way up?
There is no minimum. It's kind of whatever you want to do. If you're just starting out, you can contribute the full amount for what the IRS has. I think it's 7,000. If you're under 50, it's 7,000. If you're over 50, you can make that extra $1,000 catch up, which is 8,000 if you're over 50. So you can contribute that. If you're just starting out your IRA, you can, if you have a 401k, you can roll that money over to your IRA. But a lot of times, if you're first starting out, you're not going to have that much in your account for the full purchase price. So let's say you want to start out, you want to buy a single family rental, but you just don't have that much in your IRA. You can partner your IRA with any disqualified person. You can partner your IRA with someone else's IRA. You can even partner your IRA with personal funds. Basically, how that would look is you would need to figure out at what percentage each entity would own. So if you and your spouse sat down and say, hey, we don't have enough in each of our IRAs to cover the full purchase price, but we have enough combined to cover it. So you could do your IRA would cover 30% of the purchase price. Your spouse's IRA could cover the other 70% of the purchase price. Going forward, all your rent income, all the expenses are split that way. 30% your IRA, 70% your spouse's IRA. So you can partner, and then every time a rent income comes in, again, that's split. 30% goes to your IRA, 70% goes to your spouse's IRA. But it still increases your account value. It still grows. And then if you sell that rental property later on, again, 30% to your IRA, 70% goes to your spouse's IRA. At least you're growing, and then maybe the second property that you want to invest in, you can just use your account going forward. But it's just a better way to start out. Maybe you can partner with someone who is experienced in the business that helps you out. And then at some point you can go off on your own. That's the great opportunity that partnering provides. If you're just starting out, you can partner with someone that's a little bit more experienced in that realm, in the IRA industry, and they can kind of help you out.
You said some words there that we need to define. What is a disqualified person and what is a prohibited transaction?
Okay, so the disqualified person to your IRA would be yourself, your spouse, your children, your grandchildren, your grandparents. Fiduciaries like your attorney would be disqualified from interacting with your IRA. So if you're partnering at first, when you're buying the property, it's okay. It's okay to partner with your spouse or partner with yourself. That's fine at the initial purchase. After the purchase is made, those certain people or entities or your attorney cannot interact with your IRA. So a lot of times we have a client call in and say, hey, I want to buy a single family rental. I would just want to buy a rental home, but I want my son that is in college to live there. He can't do that because he's disqualified from interacting with the IRA. He wouldn't be able to rent or live there. Even if he just lived there or paid rent, he still can't do that because he's disqualified.
But he could partner with you to buy it if he had an
Yes.
IRA.
Yes, he can partner with you for the initial purchase. After the purchase is made, at that point, you
He
can't
can't utilize the investment.
Right. It has to be for investment purposes only. You can't use it for your personal benefit.
So you can't go
So,
have a rental property in some really cool place that's an Airbnb and then go stay in it.
right. So if you purchased a vacation home, let's say you wanted to do an Airbnb in Hawaii, you would not be able to stay in that property while you're on vacation. You can't use it for any personal use. It has to be strictly investment purposes only. Rent it out to a third party, anyone who's not related to you. Again, strictly investment purposes only.
And the same goes for flipping. So if I'm going to buy this house in my IRA and then wholesale it, I can't wholesale it to myself.
Right.
I have to sell it to somebody that's not related.
And on fix and flips like that, a, a lot of times people are attracted to that because they buy it and then they do the work themselves. It saves them money. But in this case, you wouldn't be able to do the work yourself. You can't work on the property. You can't live there. You can't do a lot of things that you would normally would. You have to hire that out to a third party, a construction company, by someone who's not related to you. So if your son owns a construction company, you wouldn't be able to hire that company to do the work on your property. That would be a prohibited transaction. So on
And
fix
your daughter couldn't be your realtor on the transaction either.
right, exactly. Your daughter wouldn't be able to get a commission off of that sale.
Or
Yep.
yourself. You can't be your own agent. I mean, you can be your own
Correct.
agent, you just can't get paid.
You just can't get the commission. Yep. That's
Okay.
exactly right. Yep. And there are 3 types of prohibited transactions. I know it's daunting and it's really sometimes it prevents people from doing the real estate IRA. But really, as long as you keep it at arm's length from yourself and from your family, generally you're fine. But you have the per se prohibited transaction where you're dealing with a disqualified person. If you hired your son's construction company to do the work on your property, that would be a per se prohibited transaction. You've got your extension of credit. So let's say you didn't have enough money in your IRA, so you received a loan and you personally guaranteed that loan, that would be a extension of credit. So if you need a loan for your IRA, it is possible. It is a non-recourse loan, so you would have to find a non-recourse lender to help you out with that. The only collateral is the property itself. Nothing personal is put up for the collateral. It's just the property itself. That way, if for some reason your IRA defaults on the loan, the only thing they can take is the property. That's it. And then, of course, your self-dealing. Self-dealing would be personally benefiting from having that property in your IRA. A good example of that would be insurance. When you have property that is in your IRA is going to be the insured on that property, either the insured or the additional insured. If you have several properties and you use one insurance company, you use one policy, and it's all housed under one umbrella, one policy, your IRA owned property and your personal, obviously that insurance company is going to give you a discount because you have all these properties under one policy. So you're personally benefiting from putting that IRA owned property in that policy because you're getting a discount. A lot of times your personally owned property would be under a different policy. You'd have 2 different policies, your IRA owned property and your personally owned property. So that would be personally benefiting if you got that discount. But those are your 3 prohibited transactions. I know it's daunting, but we work through it. I mean, as long as you're at arm's length, again, you should be fine. And then make sure you don't work with your family.
So if we want to get away from doing work on properties, oh, another option is mortgage notes. So you could be the lender, so you could be the private lender. That's one thing you could do. Or going back, Angela, my nieces and nephews couldn't rent from you. Actually, they probably could because they're not of lineal descent.
Correct. Yep. Nieces and nephews are fine. Aunts, uncles, siblings. They are not disqualified to your IRA. So they could rent from you, and that rent income goes back to the IRA.
All right, well, we've talked about my small IRA partnering with myself or another company, but are there other options like, say I want to invest in like a syndication or a small LLC with several other people? Can my IRA do that?
Yes, they can do that.
So
Yeah,
I could start my IRA with $7,000 and go put that into something if the investment would allow the money to come in. The IRA won't prohibit it.
right. No. I mean, there's some rules on that. As long as it's not 50% owned by a disqualified person, yes. You can do a multi-member LLC, yes. But there's that one specific rule, as long as it's not 50% owned by a disqualified person, yes. Single member LLCs, promissory notes, mortgage notes, the syndication that she talked about, yes.
Okay. And then Katie is asking about fees involved. So when we were talking about rehabbing a house and paying for the utilities, I'm sure there's a fee to set up the account. There's a fee to sign documents. There's a fee to pay bills. That's why the property manager is great. You only have to pay one fee for one bill instead of
Right.
10 fees for 10 bills. So kind of what are your fees for something like that?
So I can send out our fee schedule. That's no problem. But for income and expenses, we don't charge extra for those. That's kind of all included in our annual maintenance fee. So whenever we pay a bill or whenever we receive income, you're not going to see a separate billing on your transaction fees. It's all included. It's a $200 base fee a year. We bill our fees on an annual basis. So every January, your account will be billed the $200 base fee and the $175 asset holding fee. So it'll be roughly $375, depending on what you have in your account. Notes are a little bit different. Like I said, I can send out our fee schedule. If you need further explanation, please reach out to me. You can email realestate@cnbcustody.com, or you can just send me an email directly, kgriffith@cnbcustody.com, and we can go through those fees, give you a breakdown of what it would be.
Checkbook control. So that's a big one that some self-directed IRA companies will not allow you to do anything like that. Others will. What is your stance and what does that mean?
Checkbook control is, I mean, it's riskier. It's not on our website. You're not going to see anything that says checkbook control. For us, it's more your single member LLCs. So you would talk to your attorney. You would set up your single member LLC. The member of the LLC is your IRA, Community National Bank, FBO, your name IRA. That would be the member of your LLC. The manager is either you or an unrelated third party. By putting yourself on as a manager, you're taking that risk because, again, you're technically disqualified from interacting with your IRA. But being that you're the manager of that LLC, you can open up a checking account with a bank. So how that would look is you would open your IRA, get it funded either with a transfer or a rollover. You would then instruct us how much money you want us to send to your LLC. We would send it to your LLC bank account. Again, as a manager of the LLC, you can choose whatever bank you want. You can do it local. We don't have any discretion over that. It doesn't matter to us where your bank account is located. But we send the money to that checking account. And then from there, you can purchase your rental. You can, or if you buy vacant land, a lot of times this will come into play if you buy vacant land and want to build on it. It's easier to pay expenses when you have a checkbook right there and you write it rather than deal with your IRA, because you'd have to reach out to us, get a hold of us, say, hey, I need to pay this right away. We would wire the funds. But either way, it takes that middleman out of it. So you can just pay the contractor right there that day with your LLC, especially on the building part of it. Now, on when you go to purchase the property, instead of your IRA being the buyer on the contract, it's your LLC. LLC is the buyer. The IRA won't be anywhere on there. It's just the name of the LLC is going to be the buyer on the contract. On the deed, it's just going to be your LLC. So that's convenient. It's just a little bit more riskier because you have access to all those funds and they're IRA funds. So they need to be used for just the IRA portion of that property. Nothing personal can go into the checking account or bank account. Anything that goes out of that account needs to be used for the IRA owned property only. So you just have to have really good accounting skills to keep all that separate.
So I'm going to put a caveat in here before you do a checkbook control IRA. It's not just go talk to any attorney, talk to an attorney that specializes in self-directed IRAs.
Right.
It's not going to be any kind of LLC you're going to create. It needs to have in the operating agreement and all the documentation that it's set up to be a self-directed IRA
Right.
LLC. And there are very few attorneys across the country that really know anything about this. So before you I had somebody call me up. They're like, I opened my IRA, I created the LLC, and I'm ready to move the money. Am I doing it right? And I'm like, who created your LLC? LegalZoom. No, that will not work. Do not go to LegalZoom.
No, that will not work. You definitely need to find an attorney who is very familiar with the IRA IRS rules, the regulations, how it needs to be set up. That is very important. I mean, when we get the LLC operating agreement, we are going to review it. If there's anything wrong with it, I mean, of course, we'd reach out and say, hey, something else needs to go on here. We don't give you the advice basically on how to set that up. That is up to you and your attorney, but it has to have something in there that, yes, it allows for IRA investing and it goes over the IRS regulations. That would be the 4975 that goes over the prohibited transaction rules. It has to state something in there about those rules for us to be able to accept it.
It was something I was afraid of, so I didn't go with checkbook control. I let the I just sent all my bills to the custodian and had them pay. I had them sign all the documentation. It's a little bit more cumbersome.
Yeah.
But if we
It's cleaner.
have a prohibited transaction, one, somebody has to notify the IRS or the IRS has to figure that out. So,
Right.
but if they do, what happens if they find out we've completed a prohibited transaction?
Basically the IRS would contact us. It would completely void out your entire IRA. They would request us to make a full distribution. So when we do that distribution, it is the value at the first start of the year. The 1231 value is what we would value at if we had to issue a distribution. But it's not, if you had an IRA with not only just your property, but you had mutual funds, you had annuities or whatever else you had in your account. If it's all combined into one, it's not just the property that's distributed, it's the entire account. So if you had 300,000 wrapped up in this property and additional investments in your account, that whole thing would be distributed out to you. A 1099 will be issued to you in your name at the end of the year. So you would have to pay taxes on that.
Taxes on penalties on all that.
Taxes and penalties. 10% penalty will apply. If you're under that threshold, 59.5, it will apply. Yes, and taxes. Yep.
Okay. And then
we don't want to do that.
No prohibited transactions.
We don't want prohibited transactions.
So I mean, we're giving you a high level overview of how all of this works here today. But before you go in and start buying property, I highly recommend learning a little bit more. I mean, you can get your IRA set up and funded, but you might want to do a little bit more research before just diving in head first.
Right, exactly. Exactly. Give us a call. If you have a scenario that you just don't know about and don't know how to approach it, give us a call. Either me, Michelle, or Jenny. Either call us or you can also ask us at that December 10th on that meeting because we'll be there, Jenny and I. So just call us, ask us, email us, whatever you want to do there. Just give us your scenario and we can go over it with you.
And then Rich is asking how on a flip. So if I buy the house and I flip the house and I make profit, all of that money has to go back in the IRA. I can't just keep part of it.
That is correct. Right. Yes. On a fix and flip, you buy the property with your IRA. When you sell it, all the sale proceeds go back to your IRA. So the best part about that, dealing with an IRA is it's all tax deferred. So no capital gains. So if you buy a purchase property, you buy it for 50,000 and you sell it for 80,000. That's 30,000 that goes back to your IRA tax deferred until you take it out. On a traditional IRA, anything you put in tax deferred until you take it out. Once you take it out, it becomes taxable. Roth IRA is different, whereas it's still tax deferred, but it's all after tax money. So in a Roth IRA, once you start taking it out, long as you hit the qualified Roth distribution mark, it's all tax free. So that's a great advantage. That's the power of an IRA, is that it's all tax deferred and there's no capital gains. So
and I know when I first learned all about the self-directed IRAs, I was like, oh, I'm going to go wholesale all these houses and just put tons and tons of money in my IRA. But I think they've decided, since I learned about this 20 years ago, that
yeah.
if you're running a wholesale business, you probably wouldn't want to do that in your IRA.
Right.
Because that's creating a business in your IRA and it'll have to pay taxes.
Right. Now, if you do a ton of fix and flips in your IRA, let's say more than 3 a year, the IRS is going to catch on to that, and you're probably going to get UDFI, which is unrelated debt finance. So if you do a fix and flip, just, I guess, make sure you're not doing enough to where it qualifies as a business. The IRS they're intending on you keeping that rental or that piece of property in your IRA for an extended period of time. So you could get that if you do multiple fix and flips in 1 year. If you're looking for a personal, if you're wanting it for personal use, don't mess with your IRA. If you're wanting that income to go back to you personally, I would suggest, I guess, not using your IRA for that. Because if you do want the income, if you do use your IRA to purchase the property, the rent income flows back to your IRA. Again, if you want that income sent to you, it's a distribution that becomes taxable. Just going to have to go over with your financial advisor or your attorney and see what works best for you in your situation.
So what I found when I got started was, one, I didn't have the big giant IRA, so I didn't have the money to go buy a house.
Right.
And I didn't want to be self-dealing or doing anything. So I took my self-directed IRA knowledge and helped connect other people that had the money to roll over with someone like you so that they could open a self-directed IRA and then become my private investor and lend me the money. So I was using their IRA money as a loan to do all my investments, and then nothing was disqualified as long as the person I was borrowing from was not my father or my son or my grandparent. But if it was, say, my doctor and he decided he wanted to be my private lender and I could show him how to create a self-directed IRA, although I think they have other things that they use. I've learned that doctors have different kinds of investment structures than the rest of us. Somebody you meet at MAREI or another organization, the Chamber of Commerce, that they might decide to be your private lender. You could show them how to set up a self-directed IRA, and then they could lend you the money and earn all that interest or points. If they decide to charge you points, they can earn that all back into their IRA.
Right. Yeah.
And I've also seen quite a few people that work with some of the local hard money lenders in town. They use their IRA money not to buy in wholesale or buy in rehab and flip. They use their IRA money to lend through the hard money lender to get the interest.
Yeah.
And then they borrow through the hard money lender, and then they're not using their own IRA money. Well, what if we have questions like, we get off this call and or somebody's watching the replay? How do they reach out to you to get more information?
They can email realestate@cnbcustody.com. They can email me directly, kgriffith@cnbcustody.com. They can also give us a call. Our Yeah.
I want to thank you for sharing your knowledge. I know that a lot of people have a lot of questions, and if this
Yeah.
was live at the MAREI meeting with 500 people, or 50 people, you would be mobbed for the next hour and a half with everybody with their exact specific situations. So I
Right.
say,
Yep.
if you have an exact specific situation, reach out to Kellie, reach out to Michelle or Jenny, and they can walk you through what your scenario is and tell you whether it would work or not, or bring them
Yep.
to the meeting on December 10th. And
Right.
we'll have networking from 6 to 7, so they could ask you questions there as well.
Right. Yep. That's what's so much fun about real estate. Every situation is different. Every single phone call that I get, everybody wants to do something different. It's never the same. They all have different, unique opportunities that they want to get into, and it's just different. It's fun. Yeah.
And everyone is like, okay, I'm going to do this, this, and this. But I do recommend and highly recommend, before you jump in, ask the questions, because I've had so many people call me after they spent money to get something set up, but they didn't spend the money in the right fashion. And I'm like,
Right.
well, everything you did was a waste of time. You need to start over, or at least
Right.
run it by somebody that's more knowledgeable than your average attorney. So.
Right. Yep. Exactly. Yeah. Give us a call. If we can't answer it, then we will definitely direct you to your attorney. If it's anything tax related, we're not tax professionals or anything like that. We're an IRA custodian. We do not recommend any certain investments. We don't offer advice. So if it's over our heads, over our realm of what we provide, then we will either direct you to your attorney, your tax professional, or your financial advisor. So,
And you said, this is back at the beginning, if we have our money and it's not in a real estate investment at some point, do you have other, like, can we invest in stocks and bonds with our self-directed IRA at CNB?
well, we specialize in alternative investments, so we don't have a trading platform for stocks. We can hold them, yes. We just can't invest in them here daily. Since we don't have a trading platform, we're not a brokerage firm. We're just a self-directed IRA custodian that's more specializes in your alternative investments. But we do have the mutual funds. We do offer bank CDs. So there's other investments that we do offer that you can get into.
So your
Uh,
money's just not sitting there earning zero while you're looking for the next real
right.
estate investment.
Right. I mean, right now, I think our savings account money market's only 0.40% annual percentage yield. So if you want a better rate than that, then you can look into mutual funds, and you have to decide what fund you want to invest that in. If it's a money market fund, you have to tell us what you want to do. We wouldn't be able to give you a list of those investments. You would have to go out, do your own due diligence kind of, and just tell us what you'd like to invest in. And we can do that with the money that's the cash that's sitting in your IRA from all that rent income that's coming back in.
I think that's very important, because some of the self-directed custodians out there don't offer that. And your
Oh,
money's just sitting in their account doing absolutely nothing
right.
unless you move it out. I know one company is like, oh, well, just move it out and put it somewhere else until you're ready to use it and then move it back. But moving money back and forth all the time is rather difficult if you're trying to do it between two different companies.
Right. I mean, if you're going IRA to IRA, it's not a taxable event. You can do it as many times as you want throughout the year. The hassle of that is just filling out a form every time. Every time you want to transfer funds out, you have to fill out a form. And then yes, you could transfer money back in, or yeah, you could periodically move money out to your other IRA. You could do that. It's just, you have to fill out a form.
I want to thank you for your time.
Thank
Uh,
you. Yeah, a lot of fun. That was a good idea.
all right. Well, thank you, everybody. I will see you at the next one.
All right. Thank you. Y'all have a good day.